Okay, guys, welcome. Today we're going to dive more into our order blocks trading strategy and how you can utilize them when you are in the market, right? So here I'm going to simplify them up to from the higher time frames up to the lower time frames and how you can utilize these order blocks in the market so that you get some good tips when you trading in the market, right? So here, before actually looking for any order block, you must what you must first do what? You must first consider these three things, right? Look for the market bias, right? So where is the market trending, right? So the first thing you must do is looking for the bias, right? Market bias. It is a market bias. That is our first thing we must look at, right? So the next thing, before looking for any order block, you must first consider the break of structure, right? There must be a break of structure, right? And a fair value gap. So this break of structure actually it is like in the market bias, right? The break of structure is in the market bias, right? So after that, you must consider our you must consider like you must also look for the fair value gap, right? Fair value gap, right? Before like using that order block to use. And another thing, the market has to be so impulsive from that area where you're looking for that order block, right? So the market has to be impulsive. It must have moved with an impulsive move and left that order block that you are targeting, right? Market has to be impulsive, right? Market has to be impulsive, right? So you must consider these three things before choosing the order block to use, right? So after that, actually, if our market, for example, let me show you here. If our market is in the uptrend, right? If our bias is uptrend, right? So let me say this is it creates that is a higher high. This is a higher low, a higher high, a higher low, and a higher high, right? So this is our uptrend bias, right? So if that is our market, for example, if that is our market, right? This means that here the market is breaking what? It's breaking highs, right? So means we are in the uptrend. Means we have gotten our market bias, right? If we have gotten our market bias, we must look for the fair value gap in the premium or discount level. For example, if the market is uptrend, we must look for our fair value gap in the discount level, right? That means either the fair value gap, it has to be like to the extreme end of the discount level, right? It must be to the discounting level, right? So that means you must look for the fair value gap. Maybe there any provided is in the discount level, right? And also the market has to be so impulsive, as you can see here with these impulsive moves, right? You know, there are correction moves and impulsive moves, right? So the market has to be so impulsive, right? So after identifying all those things, that means you'll be able to enter your market from any position you have gotten, right? From any order block you have gotten, right? So for example, okay, let me say that this is your fair value gap here. So let me say this is your fair value gap, right? Let me say that is your fair value gap there, right? If that is your fair value gap, that means down here there must be an order block, right? That was made fair value gap. That means always we should look for that extreme order block, right? For that extreme order block that is below our fair value gap. Okay, so those are the order blocks that are what? Those are the order blocks that will be so good to choose, right? When you're trading, right? They will be highly profitable order blocks, right? So let's go to our chart and we see like what I'm trying to mean here. Okay, so if I'm coming, if I'm here on my 4-hour time frame, GBP AUD, I'm on my 4-hour time frame, right? So you can see that our bias is uptrend, right? It is bullish. Okay, so after identifying your directional bias, for example, here, as you can see, the market was breaking highs. Okay, means we are in the uptrend. Okay, so means here that is higher, that is a break of market structure. If you come here, this is a break of market structure. Okay, this is a break of market structure here. There is a break of market structure there. Okay, and also After that, this is also a break of market structure. So after identifying your directional bias, it is what? It is in the uptrend, okay? That you must look for your fair value gap just below that blue line, okay? Because it is our discount zone, okay? This fair value gap before actually the impulsive move. And you can see that when the market actually came back to our fair value gap, and below that fair value gap, there is this order block we want to consider, right? So below that fair value gap, there is this order block we want to look at, right? So there is this order block here. We want to look at our profitable order block just that was formed, right? That was formed, that was followed with this impulsive mode that made a fair value gap, right? So that means here, when the market came back to our order block, of course, it went up, right? So here, it would have been easy here to enter the market just after giving our your confirmation in the lower time frame, right? Okay, I hope you get that, guys. So also here, when I go here, you can see there was this break of structure to the upside, right? And also after identifying that break of structure to the upside, you come to your discount level after pulling out your fib and getting your 50%, right? 50%, okay? Fib level, that means below 50% it is a discount. Below this blue line we have discount, right? So you come in and you indicate your order block just right there, okay? And if the market comes back, as you can see here, if the market came back to that order block, of course the market had to impulse, right? As you can see, the market had to impulse. It had to move, right? It had to go in your direction. Hope you're getting it, guys. Okay, so thank you for watching.